Well, well, hello there, and welcome back to the Daily Wick. Um, I uploaded my first YouTube video yesterday about the basics and technical analysis, support and resistance line, trend lines, etc. And I'm going to review a little bit quickly today. As it is a short day, it's Friday, so let's take a look at what's going on. We started with yesterday Palantir monthly um, chart and the significance of a monthly, weekly, and a daily versus a 5 minute, 10 minute, 30 minute intraday is that when you see or identify support resistance levels on larger time frames, the significance of them breaking those levels is important because usually you'll have larger moves with breaks out of patterns or support resistance zones in a greater time frame. So it's great to chart out your support resistance levels so that when you're looking in a 5 minute, 10 minute time frame, that you're able to, if you do see your trend lines or your support resistance lines, you're able to identify them and apply them, and perhaps even have set up in advance alerts like we did, for example, over here on Palantir. Actually, let me just move this. Is not straight. I have to move it like this. Okay, so this was actually a channel that we identified yesterday, or I should say, a consolidation area where on a monthly, it's hard to see because it's only a few bars over here. But when we switch to, let's say, a weekly or a daily, you'll see that this area of levels, like 1, 2, 3, 4, 5, 6, 7, that area, still hard to see on a daily. You can actually see um, how many trading days traded in this area. So this area is an important area of consolidation. We're actually nearing a critical level over here. If you take a look, we drew this trend line from 88 all the way up to here. It's at 154. It tested, if you take a look, we had a really rough day here with Palantir. It's still looking rough, and it's hugging that trend line slash support line. So it's something to keep an eye on. I did check the news. I didn't see anything in particular about Palantir other than, executives selling off their shares. That sometimes does spook the market, but it also, when you're dealing with a stock that's really on a course, on a bullish course, you still want to be careful and make sure that your entry on a short side is accurate and on a longer time frame, because there is a significance and the follow through is important, is more likely. So I'm sorry, back to the monthlies. I'm sorry, back to the monthlies. So we have the monthly set up. The monthly chart. We did put some support areas and resistance areas. I'm just gonna tag one on over here because I want to have this noted for myself. And okay, price note. Then let's put it right over here because I feel like this is an important area to keep an eye on too, in the 135 zone. But that's if we do get a breakdown, we could see it test that 135 area um, based on support. So if we go to, let's say, a daily chart on that second support you have, should we break over here from yesterday, we drew this out. We had that support resistance between, let's say, 163 and 150. Should we break below here, we possibly could test the 135 because based on on a prior line that we just put in, which you can see it stopped it at 1, 2, 3, broke through it, came right back below it, broke through it, and then continued to climb. So it is important to have those support resistance levels. It's also important to have those trend lines because right now, as you can see, Palantir is trading right at that trend line. So if we do break down, we do have, like I said, room to sell down to 135. And it is kind of a change in pattern, and then we have to reassess after the sell if it should come through. We have to reassess how the entries and exits at that point, and possibly put some more support resistance levels so that we have those to look to as areas if we are trading off. If we are trading, you want to know that the resistance is ahead in about 50 cents, or that the support levels away by 50 cents, because you might want to consider exiting, if not partial, your full trade, depending on what your trading strategies were and what your trading plan was. So you have trend lines, you have support resistance levels, and support resistance levels, like I said, is an area where you see typically the candles touching to over a period of time. And it's a significant area because the more it touches it, the more it's likely to break one side or the other, and that's what you want to be able to see. I am going to now take a look at a 4 hour. I like to look at a 4 hour. You can see how it's still ranging in this area. Now trading at 149.24. Um, you could almost. If you take a look at a 4 hour, it's very interesting. I don't mean to bring this up, but since I am, might as well. I'm just gonna show you over here something that I noticed, like right at the high. You have one top, you have two tops, and let's put in a trend line. Let's just go across right here. That's where your neck would be. So you had a double top over here, right at the height of the 190. And we did test this area. We broke out. This would have been a great short. Another reason it would have been a great short is, in theory, if you take a look at the daily, you notice that there's a gap over here between 161 and 169. So that was right after they came out with their earnings, which blew the market away, traded up to 190, came off. The moment that it did trade down, it broke, it filled a gap. I tend to find that gaps fill all the time. Like, you could take a look in this chart just right off over here. You see there's a gap up over here from approximately 84 to 73, 84.73 to 100, ran to 124. Then the moment that it tested that gap area, it filled that gap. And again, you had a gap down right over here. It gapped from about 120 to about 113, came into 105. So we started trading above over here. About 113, it filled that gap. So, and again, you have this gap up over here from 160 to, let's say, 170, whatever it was, came and it filled that gap. So generally, I find that when you see gaps in the market, and a gap is, just so you have an idea, a gap is usually, I mean, it literally, this is a gap, as you can see, but usually you have some sort of news that comes out, whether it's earnings or good or positive or negative news, and you'll have it will open up pre-market at higher levels than the previous day. So it creates a gap because it's a red. So for example, in this scenario, the market closed at 4 o'clock. Earnings came out, was about 159. Before you even looked at it, it ran to 169 pre-market. So that means when the market opened the next day, it didn't. This entire area is gapped up. It's called a gap up, and like over here, you have a gap down. And again, the general rule is that gaps tend to always fill, and it's important to note. Okay, so we are looking at the 4 hour, and I just wanted to point out that the 4 hour you did have the double top over here, broke down, filled that gap, came in, and now it's testing the it's now testing that 149, 148 area. We did have a wick down here to about 142, but if we break over here, you have room to that 142. Meaning from 142 to the one. I'm sorry, from 148 to 142. And should we, if you want to wait to confirm, although it's far away, um, likelihood of it, if it does break down that 142, you could probably see that 135 that we discussed over here that we put out earlier. Okay, now that we have that set up, um, let's move on. Let's talk about Boeing. So Boeing, I just actually set this chart, so I'm going to just show you. We're in a monthly. Just to give you, here's the history of Boeing since 1968. So you can see Boeing trading, right? We had its all-time high. This was in between 2018 and 2022. Boeing had some issues over here. We came in, and you could see, and you could probably do this yourself. You can clearly look at a range. You could see the range that it's trading in between 1942 and let's say 259 in that area. I drew a couple lines here because I like to see sometimes the wicks just so that I know when I'm trading, up to what level it's possible, whether it be on the short side or the long side. So, for example, let's say I trade the break over here at 247 that I have it charted out at. I mean, it has room to 266, but it could really test that 277.45 where it wicked out over here on the monthly. And again, so you see it came in, traded, couldn't hold above, came in, traded, couldn't hold above, came in, traded, couldn't hold above. And the question is, are we going to come here or are we going to break out and possibly even break out of this level, which will give us um, which gives us room to the 300s before we find our next area of resistance. And so that's on the monthly. If we take a look on the weekly, you can form a trend line on over the last couple months. It traded, but again, that trend is within that range that we're talking about. So it's significant to a certain degree, but not as significant as the long term chart. As a matter of fact, if you did want to play off the monthly, looking at the monthly, I'm more likely to consider going short. So I would consider if we get a breakdown of maybe about 212 or in this area, 215. If we break down over here, I think we could test the 160 area. So I'm going to keep that. I think I actually have an alert on it. I may have an alert. If not, I will set up an alert. Actually, you know what? Let's set up an alert right now. Let's just see if this. Let's create an alert, and we want to message this as Boeing uh, top of range break to support. So I have an idea of what's going on. So that when I look, I'm using TradingView. If you're not familiar with it, it's a great software. I happen to love their graphs. So this is going to create it's going to create an alert so that if it should cross below the 216 area, that I know that so that I can trade out of it. Also, if it does break down over here, it's breaking out of that trend line. Even if you want to change the trend line to here, it would break out of that trend line. So if we get a breakdown, it's very likely it would follow through. But again, it's too early, and we don't know. We're not. What would you call it? I can't see through a crystal ball. I'm not a psychic, so that's why we use the charts, and that's why we use our trend lines, our support resistance. And it's also important to notice patterns. Like earlier, I showed you in Palantir, you had that double top that could have come useful to anybody that was trading. I'm even kicking myself that I didn't take that trade, although I am a long bias on the stock, so it's always hard for me to trade against something that I own long term. But if you're a range trader, um, if you are a range trader, it's good to know, because if we could hold above here, maybe before the close, I would consider possibly taking a long to um, possibly taking a long here as we're trading near the bottom of that support resistance area, and it's likely that we will bounce to that 160 area. There's no negative news, so there's nothing that actually came out on it. But back to Boeing. So we have the Boeing on the weekly, on the daily. Let's take a look. As you can see, the daily as we came in, you have your trend line starting over here. Bounced off that trend line, came under, struggled getting above it, finally broke out with a gap. As you can see, there was a gap fill. It's funny, these two gaps almost like cancel each other, but there was a gap fill right over here. We traded above the trend, and we never actually looked at that trend up until recently, where we're starting to come in a little bit. So it's something to keep an eye on. If I were to trade it, I would be obviously looking more bullish than bearish, although we are near our resistance level above at 244. So let's take a look, see what happens with it. And let's talk about Apple. Apple on a monthly. So I have pre-drawn some trends and supports and resistance areas on the monthly. As you can see, traded up off of it, tested it, up, tested it, up, tested it. Now these are all newer highs and higher lows, which is, a higher high with a higher high and a higher low consecutively is usually a continuous, very bullish uptrend. Did break out over here, which was a resistance area at the 236 this week, and it, depending on where it closed today, if we can stay above this monthly trend line area of resistance, which now it's above in the support. If we could stay above here, it's very likely that we're going to test the 260 based on technical analysis. Again, not a guru. It's not. I'm not a psychic either. I can't. But I just follow the trend. Follow what the chart is telling you. And typically, if you do follow the trend, um, and again, that even applies for when the trend, even if you do follow a trend, and then the trend breaks, well, it's a new trend. So you have to be able to quickly adapt as a trader, or even as an investor. You want to be on top of that. No, because if it should break out of this, let's see, from 2020 through 20, so it's a 5-year trend line that we're looking at over here. So it's a very bullish trend line. So likelihood of being shorted, you wouldn't consider it at this level. If we broke below this trend that we drew over here, well, that's a very important and key level, and then you can kind of map out the next areas of support resistance that the stock will have. So that's on the monthly. Let's take a look at a weekly. And you can see it more defined where I set up those support resistances. You could even put in another line over here, which is significant. As you can see, touched it once, twice, again over here, touched it several times, and then traded above it. So this is a trading range, and this is a trading range. As long as we stay above here, we're in a bullish trend, and we should continue. But again, we'll see how the market closes. And I'm gonna leave off over here today. If you guys have any questions about trend lines, understanding support resistance, and the significance of support resistance, if you like this video, please share it with your friends and subscribe, as we would greatly appreciate it. Or I should say, I would greatly appreciate it. And I'd be happy to answer any questions. I'm just basically sharing with you my knowledge, what I understand of the stock market from my experience. Um, Thank you for joining the Daily Wick today, and I hope we've enlightened you somewhat. And I look forward to seeing you in our next video. Hopefully, we'll put one out Sunday to discuss any possible setups for this upcoming week. And also, we're going to discuss patterns this week. We're going to discuss head and shoulders. There are two different, you have the top, you have the bottom, meaning there's a short side and a long side to it. You also have the H pattern, you have the cup and handle, you have double bottoms, double tops. There are so many just technical patterns that are important, because if I'm looking at it, I know that millions of other people are looking at those patterns as well. And you can see them in longer time frames and in shorter time frames. Obviously, the longer the time frame, the more significant the move will be typically if you get a breakdown. Well, with that said, thank you for joining the Daily Wick. Please click and subscribe and share with your friends, and I hope that you gained some information from this. And again, if you have any questions, leave it in the comments below, and I'll make sure to answer all questions. Thank you, and have a wonderful weekend, as this coming week is my birthday. Toodaloo.